46% of people spend more than they planned when they use Buy Now, Pay Later. That's not a coincidence. That's the business model. Buy Now, Pay Later is now used by more than half of UK adults, over 10 million people, and most of them are using it without fully understanding what they've signed up for, what happens when they miss a payment, what it means for their credit score, and what the government just changed about how these products work. In this video, I'm going to cover all three. What BNPL actually is, what the risks are that the providers don't advertise, and what changes from July 15th, 2026 that every BNPL user in the UK needs to know about. Let's get into it. Let's start with the basics, because most people using these products don't fully understand what they've signed up for. Buy Now, Pay Later, Klarna, ClearPay, PayPal, Pay in 3, Zilch, lets you split the cost of a purchase into installments. You see it at the checkout of almost every major online retailer now. Sometimes 4 or 5 different BNPL providers sitting right there as payment options alongside your debit card. The most common format is Pay in 3. You pay a third of the purchase price immediately, a third again in 30 days, and the final third in 60 days. No interest. No fees, as long as you pay on time. On the surface, and this is why it's so popular, it looks like a completely free service. Split your £120 purchase into 3 payments of £40. You get the product today and the cost is spread over 2 months. What's not to like? And for many people, that's where their understanding of the product stops. They tap, they walk away. They deal with the payments when they arrive. Here's what's happening on the other side of that transaction. Until July 15th, 2026, Buy Now, Pay Later in the UK operated almost entirely outside financial regulation. Unlike a credit card, an overdraft, or a personal loan, all of which are regulated under the Consumer Credit Act, most BNPL products were specifically structured to avoid falling under existing credit laws. That meant providers were not required to check whether you could afford the repayments before offering you credit. They didn't need to be authorized by the Financial Conduct Authority. And if they treated you unfairly, your options for complaint were extremely limited. 54% of UK adults have used these products. Over 10 million people. Using a form of credit with almost none of the consumer protections that apply to every other type of borrowing. Now, let's talk about what the providers don't put on the checkout page. Risk 1. It makes you spend more. By design. Research consistently shows that 46% of BNPL users spend more than they intended to because the option is available. Nearly half of all users. And the reason is straightforward psychology. When you split a £120 purchase into 3 payments of £40, your brain doesn't register a £120 decision. It registers a £40 decision. And £40 feels manageable for things that £120 wouldn't. So you buy the more expensive version. You add more items to the basket. You say yes to purchases you'd have said no to if you had to pay the full amount right now. BNPL doesn't reduce the cost of anything. It reduces the feeling of the cost. And that psychological gap is precisely where most people get into trouble. Risk 2. Missing a payment has real consequences. 41% of BNPL users in the UK have missed at least one payment in the past year. That's not a small number. That's nearly half of all users failing to keep up with repayments on at least one occasion. When you miss a payment, the provider charges a late fee. The specific amount varies by provider. ClearPay charges up to £6 per missed payment, capped at 25% of the purchase value. Klarna's fees vary by product. But from July 2026, there's an additional consequence that makes this significantly more serious. Under the new regulatory regime, BNPL providers can report missed payments to credit reference agencies. That means a missed £40 instalment on a Klarna order could appear on your credit file. The same file that a mortgage lender, a letting agent, or a phone network checks before deciding whether to offer you their product. For anyone planning to buy a home in the next few years, this is the most important thing in this video. Risk 3. Most people don't think of it as debt. Research from multiple sources consistently shows that a significant proportion of BNPL users don't perceive what they're using as a form of credit. It feels like a payment method. It feels like a checkout option. It doesn't feel like borrowing money, but it is borrowing money. Every BNPL agreement is a credit agreement. The provider is lending you the cost of the purchase, and you are agreeing to repay it on a schedule. The fact that it's interest-free and embedded in a shopping checkout doesn't change what it legally and financially is. Now, the new rules, because this is actually good news for consumers. If you understand what's changed, from July 15th, 2026, Buy Now Pay, later in the UK, comes under full financial regulation for the first time. Providers like Klarna, ClearPay, PayPal, and Zilch must now be authorised by the Financial Conduct Authority, the same body that regulates banks, insurers, and mortgage lenders. 3 things change specifically. Change 1. Affordability checks. Before July 2026, a BNPL provider could offer you £500 of credit without knowing anything about your financial situation. From July 2026, they have to assess whether you can realistically afford the repayments before offering the product. If you're juggling multiple BNPL agreements, that now has to be factored in. Change 2. The right to complain to the Financial Ombudsman Service. Before regulation, if a BNPL provider treated you unfairly, charged incorrectly, refused a legitimate refund, or handled your account badly, you had almost no formal recourse. From July 2026, you can escalate to the Financial Ombudsman, the independent body that resolves disputes between consumers and financial firms. This is a significant shift in power toward the consumer. Let's recap. Buy Now Pay Later splits purchases into installments, usually 3, interest-free if you pay on time. 54% of UK adults now use it, but 46% of users spend more than they intended to, and 41% have missed at least one payment. The risks are the overspending psychology, the late fees, and, from July 2026, the potential credit score impact of missed payments. The new regulations from July 15th, 2026 bring BNPL under full FCA oversight for the first time, meaning affordability checks before you're offered credit, the right to complain to the Financial Ombudsman, and faster refunds. BNPL is a tool. Whether it helps or hurts you depends entirely on how you use it. Subscribe. Next week I'm covering credit scores, how they're calculated, what damages them, and, importantly, how BNPL fits into that picture after the July 2026 changes. If you use any BNPL product, that video is a direct continuation of this one. Drop a comment below. Do you use Klarna, ClearPay, or any other BNPL product? And did you know about the July 2026 regulation changes before watching this? Let's hear it. See you Thursday.